CeMAP 3 is a little bit different, but it is still a multiple choice exam. So it's the same in a sense of you are not writing a case study. A lot of people think you have to write case studies to get through CeMAP 3. You don't. You are provided with case studies, and it is still multiple choice questions, exactly the same as what you had in CeMAP 1 and in CeMAP 2. You have 60 questions in total, so it's not 100 like CeMAP 1 and 2, it's 60, and it's a 70% pass mark overall. So for you guys who've sat CeMAP 1 and CeMAP 2 already, you'll remember that you have to get 70% in each unit of the exam to pass it in full. Doesn't work like that in CeMAP 3. You have to get 42 out of 60 in total to pass the whole thing. And the other really common question that I get asked is, Charlotte, what material do I study for CeMAP 3? Because I got a textbook for CeMAP 1 and I got a textbook for CeMAP 2, but they didn't send me a textbook for CeMAP 3. It is all the CeMAP 2 stuff. So what I would recommend for anybody who hasn't yet sat CeMAP 2 is to book CeMAP 2 and CeMAP 3 about a day apart, because the material is fresh in your brain. Do not leave it too long, because there is nothing extra that you need for CeMAP 3 that you don't already have for CeMAP 2. And the way that it's broken down is it's 6 case studies and you get 10 questions per case study. I am going to give you an example case study in this training, and I'll pop it in the chat so everybody can download it and keep it and go through it at some point, just to see what they look like. The one thing that I would say is, if you can get your hands on mock exam papers, that is the biggest difference that you can make. It's also the cheapest thing that you can do to be able to leverage your studies for CeMAP 3. So what makes it different? As I've already said, questions are based on case studies, and it's about finding the most appropriate advice to the case study, not just finding the right answer to the question. So what you will find is a lot of the questions in the question bank you cannot answer without referring to the case study. The quick hack that I'll cover at the end is that you actually don't need to read a lot of the case studies to answer most of the questions, because about 80% of the questions you can answer without even reading the case study, but I'll come on to that at the end. And then I am going to work through a case study with you. So guys, if you all open your chat box, I'm about to drop an example case study in there. And I'm going to share it on my screen as well so you can all see it. Has that come through to everybody? At least I can still see your face. So if you can give me a nod, and just so I know that's come through. Oh, yeah, there we go. That's perfect. Brilliant. I will share it on my screen as well so we can go through it together. So everybody should be able to see on my screen now a page that says Emily and James's case study. I am going to read this through with you guys. And what I'm going to say is, please try not to get overwhelmed. I will teach you how to not get overwhelmed with this at the end of the session. But this is very similar to the types of questions or the types of case studies that you can get in CeMAP 3. So Emily, 35, and James, 37, are a married couple with 2 children, aged 4 and 7. They are looking to purchase a larger home to accommodate their growing family. Emily works as a teacher, earning £34,000 annually, and receives £1,500 performance bonus each year, although it's subject to change based on school funding. James is a manager at a logistics company with a base salary of £50,000 and annual bonus of £1,000, which he has received consistently for the past 3 years. James has a sick pay package, which would pay him 6 months full salary in the event of sickness. Emily has no sick pay package in place. Neither of them currently have any life insurance or protection products in place, and would be interested to plug any significant gaps on a long-term basis to ensure security for the future. The property they are interested in is a 1960s 3-bedroom house listed at £350,000. They plan to apply for a 90% loan-to-value mortgage on a 25-year term. Emily and James are interested in a variable rate mortgage with a 2-year discount period, and they are considering refinancing options after 2 years. They have around £15,000 saved for initial renovations, as they are aware that the property needs some cosmetic upgrades. James has concerns about the heating and plumbing systems, as have no whether it will reveal potential defects in the heating system. They want advice on whether this type of survey will meet their needs, or if they should consider a more comprehensive assessment. I appreciate it's like a lot of information. It is a lot of information. That is about the amount of information you can expect per case study. And what I find my students tend to do when they sit the exam is they look at that and they try and retain everything all at once, and they go, oh my God, that's really difficult. How am I meant to remember all that information? And that's what kind of wigs them out in their exam, and that's what makes them fail. So my first tip that I'm going to give to everybody before we move on to the actual training is, with all of your questions, it will be displayed with the case study on one side of your screen, the question on the other side of the screen. And you can flick through your questions as you've got your case studies. Read the question first and ask yourself, do I need to look at this case study to answer this question? Because what you are likely to find is that 70% of the questions per case study, you do not need the case study to answer. And if you can find a way to be able to do that, you will save yourself a lot of stress. But keep a hold of that case study, because that will be really, really good to go through. For any of you guys who've got the e-learning platform, this case study is in there along with the questions for it. So definitely go and check those out if you sit in CeMAP 3 shortly. But everybody save that document. It is in the chat. Make sure you've got hold of it, because we are going to come back to it in just a second. So today's particular CeMAP 3 hack is going to be about why life insurance and protection is the secret to passing your CeMAP 3 exam. The reason that I am slightly different from most of my other providers is that I work on a one-to-one basis with a lot of my students, which means that I'm privileged enough to get quite a lot of feedback from my students after they sit their exam. And just recently, I've had a lot more feedback for CeMAP 3, and the general consensus has been that up to 20 to 30% of your overall grade for CeMAP 3 is based on life insurance and financial protection. And that's what we're going to focus on in this topic. And I've got a little bit of a hack that will help you figure out all the right answers for these questions. But the feedback is that each case study will have at least 2 questions based on life insurance or financial protection. Now, I'll be honest, in CeMAP 1, you can get through it with almost no knowledge on life insurance and protection, and that's absolutely fine. Obviously, with CeMAP 2, it's a little bit different. You have a whole life insurance and protection unit that you have to pass. But with CeMAP 3, they almost step it up a notch. So we are going to work through something called a 4-step framework, which looks like this. I am going to give you all a PDF download so that you can have this and save it and go away and practice with it at the end of the session. I'll drop it into the chat shortly. But I want to walk through the basics of this first, because there might be quite a few people who haven't yet sat CeMAP 1. And if I don't take a step back now and teach the fundamental basics, I'm going to lose all of you guys at this point. So let's do that. The first thing I'm going to cover is the difference between life insurance and financial protection, because they are 2 completely separate things that people don't often recognize the difference between. So the first point is that life insurance is a product that you take out and you pay into monthly, just like car insurance. And if you die, it will pay out a lump sum to whoever you want it to pay out to. That's life insurance. I imagine quite a few of us in this chat will have life insurance. That is different to financial protection. So financial protection, it's also a product that you take out and you pay into monthly, just like car insurance. But the difference is if something happened that left you unable to work or critically ill, it would either pay a lump sum or replace some of your income to alleviate the financial strain. The way I write this in my notes every single time that I teach this is life insurance is for if you die. Financial protection is for if you don't die. Because actually, the strain with financial protection can sometimes almost be worse. And that's because you are still around to live through that financial burden. So that's the difference between the 2. So just a quick recap, guys, on life insurance key points then. So life insurance, for CeMAP 3, we can broadly split it into 2 categories. We have term insurance versus whole of life insurance. You guys who are really hot on CeMAP 1 will go, Charlotte, what about convertible term insurance? Nobody's ever fed back to me that they've had a question on that in CeMAP 3. So we're not going to cover it in this evening session. We're just going to talk about the 2 different types of term insurance. The 2 different types of insurance. One is term insurance and one is whole of life. If we start with term insurance, the clue is in the name. It covers you for a specific term. For example, if you take out a 25-year term insurance policy, you will be covered for the next 25 years. If you die within that term or within that 25 years, it will pay out to your beneficiaries. If you survive that term, though, the policy ends, no payout is made, and no monthly payments are refunded. And this is the point where people go, well, Charlotte, that's not fair. And what I say to those people is, okay, but your car insurance is the same. If you don't have an accident in 12 months that your car insurance runs, you won't get a refund of your premiums, unfortunately. So that's option one, term insurance. Option two is called whole of life insurance. And again, the clue is in the name. This covers you for the rest of your life and will pay out regardless of when you die. So it might pay out when you're 37 if that's when you die. If you don't die till you're 107, it will pay out then. Because it will definitely pay out eventually, it is considered generally more expensive, because with term insurance, they're kind of banking on you not dying during your mortgage term or during the term of the policy. So quick points then, guys, with term insurance, if this is the first time that you're ever hearing this. First of all, cost-wise, because there is a chance that the policy may never have to pay out, it is generally considered the most cost-effective way to protect your mortgage. So if you take out a mortgage tomorrow, your mortgage advisor might go, hey, we need to get you protected in case you die. Shall we look at a term insurance product? And they will set your life insurance term to your mortgage term, because once your mortgage is paid off, you don't need it anymore. There are three types of term insurance. We've got decreasing term, level term, and convertible term. And I'll just give you a quick recap on the three. Decreasing term insurance is also called mortgage protection insurance, or MPI. That will come up in either your CeMAP 1 or your CeMAP 2 or your CeMAP 3 exam. So make a note of that. Decreasing term insurance is often called mortgage protection insurance, or MPI. And the way that this works is the payout amount goes down over time, just like your mortgage outstanding balance. So if you have what your textbook will call a capital and repayment mortgage, what that means is every single month when you make your mortgage payment, your outstanding balance goes down a little bit. So at the end of your mortgage term, you'll be mortgage free. You'll own your home. Happy days. Decreasing term insurance is designed to follow your outstanding debt. So if you didn't die until the last month of your mortgage payments, it would only pay out effectively that last bit of outstanding balance. So it is always the best for a standard, what we call capital and repayment mortgage. Option two is called level term insurance. And this is where the payout amount stays the same, or it remains level over time. And this is best for interest-only mortgages. I'm not going to dig into interest-only mortgages in this session, guys, just because I don't have that much time. But the idea is your outstanding balance throughout your mortgage term remains exactly the same. So if you take out a mortgage tomorrow for £300,000 and you make your interest-only payments for the next 25 years, you'll still owe £300,000 after 25 years. And that's why with level term insurance, your payout amount remains level. The last one, which we're not going to jump into too much detail on, is convertible term insurance. I don't think this comes up very often in people's CeMAP 3 exams, but with this, it gives you the option to switch from a term product to a whole of life product later down the line. But like I said, I don't think you'll need this. Sarah, yes, you just asked, will this video be available after? It will be available. It will be going up on YouTube at some point next week. It will also be in the free version of the e-learning platform. So if anybody does think that they want to recap this, it will be available for everybody that's here. So we've done term products. We've got those. Whole of life insurance is the next one. And I mentioned that that one was a little bit more expensive because the only things that are certain in life are death and taxes. I don't know whose quote that is, but that's the one that I always use for this bit. Because they know they are definitely going to pay out, it is generally more expensive, which means it can be a generally harder sell. Most people will take out a whole of life policy for things like inheritance tax mitigation, which we'll come on to in a little bit more detail in this topic. Estate planning. So if it is that you wanted to leave a tax-free lump sum to your kids if you died, you would take out a whole of life insurance policy. And funeral costs is the one that a lot of people forget. If you've heard of things like, Sun Life over 50s funeral cover or AXA over 50s funeral cover, they are just whole of life policies. And generally they're level term. So you'll say, oh, okay, I'll pay out. Sorry, they pay out a level amount. So if you know that your funeral is going to cost like £15,000, you take out a £15,000 whole of life policy and they just call it funeral cover, but it's the same thing. Guys, that is life insurance in a very, very short nutshell. So for CeMAP 3, that's just a really quick recap. If we move on to financial protection, while a lot of people think about covering themselves if they die, especially if they've got a partner and kids, often people forget to cover themselves against things like sickness, disability, a really bad accident that means you never go back to work. All of those things are kind of more likely statistically to happen than for you to die during your mortgage term. So people usually should look at both life insurance and financial protection. For your CeMAP 3 exam, there are 5 different types of financial protection that we would need to look at. So we've got something called critical illness cover, another one called income protection insurance. Guys, those are your main 2 ones. Those are the 2 most common ones that you get in CeMAP 3. And then I bunched the last 3 together, and I'll explain why in a second. So you have accident, sickness, and unemployment cover, payment protection insurance, or PPI, which I'm sure we've all heard of before, and mortgage payment protection insurance is the other one. They sometimes abbreviate that one to MPPI. And I just want to draw your attention to that for a second, because sometimes what can happen is they will ask you about mortgage protection insurance, which remember is decreasing term life insurance. And then they ask you about mortgage payment protection insurance, which is just one word different, completely different product. It's not life insurance. So do make a note of that as well if you are making notes. So just to box off these then real quick, critical illness cover is the first one. For CeMAP 3, this is almost everything that you need to know about critical illness cover, because they tend to hammer you with questions in CeMAP 2. As long as you know that it pays a tax-free lump sum, if you get critically ill, you should be fine. A lot of people forget that critically ill thing. So it only covers you if you tick a box from a pretty severe list of conditions. That's how it differs from income protection insurance, because if anything happens that means you can't work, income protection insurance is likely to kick in. Critical illness cover will only cover you if you get critically ill. Really common exam question in CeMAP 3 is to do with the survival period. If you've never heard of this before, the concept is, if we imagine that you had a heart attack, that would constitute as you being critically ill, you would have to survive a certain number of days before the policy would pay out. Generally speaking, within the industry, the survival period is around 14 to 30 days. And if you were to pass away before that 14 or 30-day mark, the policy doesn't pay out because it says, well, you probably got life insurance. That's what a survival period is. And that's critical illness cover. The feedback that I've had recently, there haven't really been any case studies where critical illness cover has been the recommendation. Actually, most of the recommendations that we see come up in CeMAP 3 case studies tend to be focused around income protection insurance. So income protection insurance is long-term financial protection. If any of you have a case study that says somebody wants to protect themselves on a long-term basis if they can't work, you are going to recommend them income protection insurance every single time. There is no other product that does that. So it is designed to replace your income. It's not your whole income, it is just a portion of it, but it does that up until retirement. The other really common exam question with income protection insurance is to do with the deferred period. So if a deferred period is how long could you exist before you needed to claim on this policy? And guys, I'm going to stop sharing for a second because I really want this to stick in. I want you all to think about, if you couldn't work tomorrow, so if you woke up tomorrow and you couldn't go back to work, how long could you survive financially before you were in the red? You do not need to answer this in the chat, but I would just like you to think about it for a second, because it's a really important question. Now, some of you might be lucky enough to have sick pay with work. Some of you might have 3 or 6 months full sick pay packages, and that is amazing. Some of you might be self-employed, or you might get no sick pay, which means all of a sudden you are reliant on things like, well, really your savings. So this idea of a deferred period is, how long could you go before you needed to claim on the policy? And immediately you should be thinking to yourself, okay, if they've got sick pay, it means that if they took out income protection insurance, they would be able to set their deferred period to whatever their sick pay package ends at. And that makes their premium cheaper, because there is a much lesser chance of you being off work sick for 6 months than there is from you being off work sick for 4 weeks. The minimum deferred period for all policies, guys, right across the board is 4 weeks. That's another really common exam question. But does everyone feel comfortable with this idea of a deferred period, or how long could you go before you needed to claim on the policy? So these are main 2, critical illness cover or income protection insurance. With most of the CeMAP 3 case studies that I've seen, we tend to lean more towards income protection insurance. The problem with IPI is it's expensive. If you are a young person and you want your income to be covered until you reach retirement, that is a potentially very long period of time that they will be paying out. So income protection insurance can be quite expensive. And when people are taking out a mortgage, they don't want to then lumber themselves with really expensive life insurance and protection. It's a really hard sell, but you would rather your client had some sort of protection than nothing, right? And that's where these short-term alternatives come in. So we have three, and they are placed in this order because this is the order of price. So we have income protection insurance at the top as the most expensive product. These three products are similar, but they operate on a shorter term basis. The hack for this page, guys, if people don't want to make notes because it's late in the evening, is they all run for a period of 2 years and they all have a minimum deferred period of 4 weeks. You are almost guaranteed to get that in one of your exams. But there is a difference between the three. Accident, sickness, and unemployment cover will replace your income. So it's a short-term income protection. In effect, pays out for a maximum of 2 years. At the end of the 2-year period, the policy just ends. That's it. You're not covered anymore. And it has a minimum deferred period of 4 weeks. Payment protection insurance, or PPI, some of you may remember those really annoying adverts, is the next one on the list. This is similar, except instead of replacing your income, it will just pay your debts for a maximum of 2 years. So whereas ASU, or accident, sickness, and unemployment cover, replaced your income, PPI just paid your debts. Again, maximum of 2 years with a minimum 4-week deferred period. Because it's likely to pay out less, it is a cheaper product. And if it is that is still a too expensive option for your client, you can go with MPPI, or mortgage payment protection insurance. This is cheaper again because it doesn't replace your income. It doesn't cover your debts. It just pays your mortgage payments. And again, it pays your mortgage payments for a maximum of 2 years with a 4-week minimum deferred period. So guys, we're going to put this into practice in a second, but I just want to do a really quick recap. So we've just done life insurance. We've just spoken about the two different types, term and whole of life. We then moved on to financial protection and we said, okay, the big ones are critical illness cover and income protection insurance. But ideally, we'd lean into income protection insurance more just because it's long-term cover and it covers you for more stuff. That being said, price point can be a problem. So we have the 3 cheaper alternatives. Does everybody feel all right with that so far? Fab. Somebody just asked which ones don't cover redundancy or unemployment cover. The answer is most of them cover redundancy, but not unemployment, but they are provider dependent. So if you were just to quit your job because it was a Thursday and you hated the people that you worked with, you wouldn't be covered. If you were made redundant, a lot of them would cover you, but not always. So it's always provider dependent. James just asked, what was the second of the 3? So we had accident, sickness, and unemployment cover was the top one. Then we had PPI, or payment protection insurance. And then we had MPPI, or mortgage payment protection insurance. Now, guys, I am just dropping cheat sheet into the chat for everybody. So I need you to all open up your chat box for a second. You will see a picture in there that you have the opportunity to save. Please do this now because I'm going to give you homework. You don't have to do it because most of you will probably never touch base with me ever again, but it will be a really good activity for you, CeMAP 3. So make sure you've got that downloaded. And I will share it on my screen now as well. So this is our 4-step framework. And if you practice with just this sheet, you will be able to go into your CeMAP 3 exam and you have a little note box or like a little notepad in your CeMAP 3. And if you can remember to write down these titles here, so number 1 is term insurance, then you have whole of life, then critical illness cover, income protection, or ASU, PPI, MPPI, that feels like a lot to remember. And if you can go in and have a mental note of those ready to put into your notepad, you will not get any of your life insurance or financial protection questions wrong. Shona's just asked a really good question. Will they give you the full name or will they shorten it? I'm actually not too sure on that one. I think that they give you the full name, but I'll see if I can double check with a couple of my students and maybe post a story on Instagram about it just to let people know. Oh, Victoria, thank you very much. They give you the full name. Perfect. So if you can go into your CeMAP 3 exam, what you can do is you can, first of all, look at the question. We've established that. If you ignore your case study, you are going to be in a much better headspace to answer your question. If it is that you get a life insurance or financial protection question, A lot of the time, you still don't need to read the case study. Your question might be something like, what is the average deferred period for accident, sickness, and unemployment cover? In which case, it's 4 weeks, regardless of what the case study says. So read the question first and then go, okay, do I need the case study to be able to answer this question? And if you do, these are the 4 steps that you will follow to be able to package anybody up with the right level of life insurance and financial protection. And I am going to give you homework to do this with like friends, family, and strangers on the street in a second, which will help this really stick in your brain. But step number 1 with this method is to think about term insurance. And we have 2 types. We're going to ignore the third one. If your case study says that they have a capital and repayment mortgage or a repayment mortgage, you are immediately going to go, oh, if they need to protect their mortgage, then they need a term mortgage product. And it's decreasing term because the amount goes down. If it is that your case study says they have an interest-only mortgage, what you need to go is, oh, okay, so I know that with interest-only mortgages, they need a level term product because the payout amount remains the same. It is always going to be one of these 2. If they want to protect their mortgage in the event of death, you are always looking at decreasing term or level term. We're going to ignore convertible term for CeMAP 3. That's step 1. Is their mortgage protected? Guys, if you are making notes, that's a really nice sentence for step 1 of this kind of 4-step method. Step 1 is their mortgage protected? Step 2 would be, is their family protected? So we're going to potentially look at whole of life cover. Generally speaking, if you get this in CeMAP 3, it tends to be that your client wants to leave a tax-free inheritance for their kids if they die. In which case, a term product is no good. If they have the term, it doesn't pay out. So we're going to look at whole of life product. So if they'd like to leave a tax-free inheritance to any children, guys, I'm just at point number 2 here, or a lump sum to cover their inheritance tax liability, then they can use a whole of life product. Some of you may have gotten questions on whole of life products in CeMAP 1 about tying them into trust. That's great if you did. I'm not going to cover that in this particular topic, but that is life insurance done. Really, you've got 2 options. Pick the term product and do they need a whole of life product? That's it. Step number 3 is financial protection. And whilst critical illness cover is the top of this list, feedback that I've had recently is that almost none of the case studies have had a requirement for critical illness cover. And that's because it is quite particular in what it covers. You do have to become critically ill. So as long as you remember with critical illness cover is that it pays a tax-free lump sum, that is going to be your game changer for CeMAP 3. If your case study specifically says that they would like a tax-free lump sum if anything really bad happened to them. The other really common exam question with critical illness cover is to do with that survival period. So please remember that is how many days does that person need to survive before the payout is made? And the industry standard, another common exam question, is anywhere between 14 and 28 or 14 and 30 days. That's critical illness cover. It will be a yes or no in a sense of have they asked for a lump sum if they get really, really, really poorly. Income protection insurance is considered the golden boy of financial protection for CeMAP 3. Most of your clients, you'll find we lean towards this, and that is because it is long-term financial protection. So it is designed to replace your income potentially until retirement. And the other really common exam question that we get with income protection insurance is to do with the person's deferred period. This one, a lot of people, because they don't look at the case study. And I'm going to give you an example of a case study in a second. It's the one that you've all already got, where your brain should be going, okay, this tells me what product they want, and this tells me about the particular quirk or deferred period of that product. But please remember that deferred periods link to sick pay. Always, the 2 go really well together. And if it is that you have a case study where it says, your client would like income protection insurance, but it's just a bit expensive. They can't afford it right now because their mortgage is already really expensive. We then have our last 3 products, which we can group together. So step 5 here, I love how I put that it was a 4-step method and it's actually a 5-step method. We have accident, sickness, and unemployment cover, or payment protection insurance, or mortgage payment protection insurance. They all work the same in the sense of they pay out for 2 years and they have a 4-week deferred period. The difference is what they pay is slightly different. So accident, sickness, and unemployment cover replaces your income. Payment protection insurance pays your debts, and mortgage payment protection insurance pays just your mortgage. Remember that runs in costing as well. So mortgage payment protection insurance is pretty much always going to be your cheapest product because it just pays your mortgage. So if it is that you have a case study where somebody is really, really, really tight on cash, they just want some level of short-term protection for their mortgage, you are absolutely going to recommend mortgage payment protection insurance. It is the cheapest product, but it's all about, okay, what is in the case study? Before I move on to your homework, I just wanted to cover really quickly a couple of the mistakes that people tend to make a lot in CeMAP 3. So the two biggest mistakes that people make with CeMAP 3, number one is they focus too much on calculation questions. Hands up here, guys, and be honest. Who has spent an extraordinary amount of time stressing and lying awake at night and recapping calculation questions because they just don't know what they're doing? Okay, fab. So quite a few people have done this. The feedback has been that you will get probably no more than 6 calculation questions in CeMAP 3, but you're going to get 12 on life insurance and financial protection. So stop wasting time on calculation questions, please. If your maths is not great and mine is not great, brush up on the high mark topics like life insurance and protection and wing it with the calculation questions, because when you are a qualified mortgage advisor, we have this newfound fangled thing called the internet and calculators where you'll never need to do those calculations ever again. If anybody is struggling with calculation questions and they've had no help with it, my YouTube channel, I give breakdowns of how to do each of the calculation questions for CeMAP 3. And there's also loads of downloadable products as well in the free version of the e-learning platform, so you don't even have to pay for it. Please utilize those because they will really help. But please stop spending so much time on calculation questions because it is such a small percentage of your overall grade with CeMAP 3. Figure out this stuff instead. Graham, thank you so much. You backed me up so that we know that I'm not just talking rubbish. You said there are a fair amount of life insurance and financial protection questions, but there's also stuff on SMI, secured loans, bridging finance. That's really helpful for everybody, actually. Thank you so much for that. Then point number 2 is stop rushing your case study reading. So instead of frying your brain trying to retain all of the case study information, go straight to the question and ask yourself, okay, can I answer this question without looking at the case study? Unbelievably, 70% of the questions in your CeMAP 3 exam you can very often answer without looking at the case study. So please, please, please try that first. It takes a lot of balls to do it because people think it's just the wrong way around. But when I have students who do a resit, they never do it on their first sitting of CeMAP 3. They come to do it on their second sitting of the exam and they go, oh, that was so much better. Thanks for that advice. So do give that a go. If it is that you read it and you realize you need the case study, go back and just find the information that you need, because you will never be able to retain all of the information in this case study or in any of the case studies that you get given. What I wanted to do really quick before I box off this session and we go on to the Q&A is just to highlight which bit of this case study gives us the clues if we were to get any life insurance or financial protection questions. This is a really good exercise to do. So it starts from here, this bit. So James has a sick pay package, which would pay him 6 months full salary in the event of sickness. Emily has no sick pay package in place. Neither of them currently have any life insurance or protection products in place and would be interested to plug any significant gaps on a long-term basis to ensure security for the future. If we take just this bit here and then we follow this framework, guys, just to double check, has this other cheat sheet up screens, or do I need to reshare my screen? Just give me a thumbs up if it's come up. Perfect. So if we look at that information that they've given us and then we look at this, they have no life insurance in place. And we know that they want a capital and repayment mortgage. So step 1 is going to go, okay, they do need to protect their mortgage. They need a term insurance product. We are going to give them decreasing term because they've got a capital and repayment mortgage. That is step 1 done. They didn't mention anything about leaving an inheritance for their kids, though, or covering their inheritance tax liabilities. So actually, there's no requirement for number 2 in this scenario. Critical illness cover. Okay, we could recommend maybe under point number 3, but the sentence was they would be interested to plug any significant gaps on a long-term basis. That means that there is only one suitable option, and it is income protection insurance every single time. So long-term financial protection designed to replace your income until retirement. There is one last thing in that case study, which is important. And it's their sick pay packages, right? Because that links to deferred periods. So we've established that James has a sick pay package of 6 months, whereas Emily has no sick pay package. And what that means for deferred period is James's deferred period could be 6 months, which means his premiums would probably be a whole lot cheaper in comparison to Emily, who has no sick pay package. She might need to start claiming in week 4. Her premiums are likely to be more expensive because of that. And we're not going to these because they've already. So usually we go for 4 or 5. We don't go for both. And this is how to use this process. But just to cover off what I would like you to do as your homework, which I promise will help with the next step of your CeMAP 3 studies. I know a couple of you messaged to say mine's tomorrow, but you'll definitely have time for this. So guys, after this session, or whenever you next feel like picking up CeMAP, it would be really good for you to tell a story. So pick a friend or a workmate, the person that you just met in Tesco, and imagine their entire life and a completely made up story. Where do they work? Are they single, married, cohabiting? Do they have kids? Do they have a mortgage? Once you've done that, package up their life insurance and protection products following those 5 steps. You will not go wrong in your case studies if you have done this. Do it with your favorite celebrities. That's an activity I do with my students all the time. It's loads of fun, and it will just get you into the habit of remembering those 5 different steps. And just remember as well, you are absolutely not alone in this. There's quite a few people in this training tonight. All of you guys, I'm assuming, are studying for CeMAP 3, which tells me that none of you are doing this on your own. And if anybody does feel particularly isolated, please, please, please go on and join the WhatsApp community. So there is a WhatsApp community. You can join it in WhatsApp. There's about 500 of the students that are studying for CeMAP. Absolutely mute the chat because everybody sends messages at all times in the evening. But if you want a place where you can go and just ask study questions or celebrate your wins or complain about how boring the textbook is, go to this link. There is a link to join the WhatsApp group. A lot of people find a lot of value in this, and it is completely free to join. It is super, super helpful. And if it is that you've sat through the session and this is your first introduction to me, I know a few of you have messaged about products and services before you jumped into this training. I just wanted to recap what I do for you guys. And I have 2 main things that I can do for you all. I do something called a fast track course, which is something you've probably heard of before. I call it a masterclass because it's like a fast track course on steroids. And it is basically where you spend 5 days with me over Zoom, and I will get you through your exams, kicking and screaming, come hell or high water. So I will teach you everything that you need from your textbook to get you CeMAP qualified. In an ideal scenario, we would log in at 9 o'clock on the Monday, log out on the Friday, you would sit your exam on the Saturday and Sunday and have a really good chance of passing. I will stay with you until you are qualified with a masterclass. So there is one masterclass for CeMAP 1, there's another one for CeMAP 2 and 3. The only disadvantage that I have at the minute is, unfortunately, I think my masterclasses are fully booked till September or October, which I know is what a lot of you have been messaging me about. I do have waiting lists, but the way that it works is it's 5 days. You get full support with one-on-one sessions, full access to me over phone calls, Zooms, WhatsApp, everything. I will stay with you until you're qualified. If it is that you wanted a masterclass space and you couldn't get one, I do also offer an e-learning package. And guys, everything that is in the e-learning package is what I teach in the masterclass. There is actually no difference outside of the fact that I am not there to keep you accountable. So if you feel confident that you are going to put the time in and the work in for studying, and you want an all-inclusive package with video files, audio files, PDFs, all of that stuff, and you want access to a tutor like me through WhatsApp, the e-learning package is the way to go if you need to get qualified before October, because unfortunately, I don't have any space until then. Samantha, the masterclass groups, they are no more than 10 students at a time. And that's because when you buy a masterclass space, I work in a group I work during the week with the group, but I will also work with you on a one-to-one basis. So you have so many hours worth of one-to-ones that you can cash in. and I can't fit any more than 10 people in because I want to get you all through your exams within 7 days. So they are relatively small groups. The things that I do ask with the masterclass are things like, please keep your cameras on because I need to make sure that you're not falling asleep because it is a tough week. And just make sure that you're there. Like I can, reply to my messages because it is my job to get you through your exams. I think I'm still the only provider that offers a 100% if you didn't feel completely supported throughout the entire CeMAP journey. So it is my job to get you through it. And actually, that's it for this training session, guys. It has been an absolute blast. Thank you for being here. I'm going to open up the floor for questions, and I'm going to give you guys until exactly 9 o'clock, and then that's my bedtime before I kick you all out. So please feel free to switch your cameras back on. I'm going to switch the recording off now, so you can do that and ask me as many questions as you like. Thank you so much, and thank you for being here.